Right, good. Right, let's get this out here. Wow, gold's done it. Gold has done an empty strategy move all the way back down, retraced at least 38.2. Fantastic move. What a move. Fantastic move. Right. Let's get that on there. Let's get this started. Kick it up a gear. Come on, let's get this on there as well. There we go, MT strategy.
Yeah, we're mountain bikers. Our you and I kids and stuff. Yeah, we had some friends that went to Whistler and stuff.
Very nice. Yeah.
About it. Yeah.
That's on the bucket list for me. So.
Right. Yeah. Yeah. For us too. For us too. I got there's on YouTube a rollerblader. He's just an awesome city skater that's in Toronto where you are. I follow him. He's got some gear. Yeah.
Send me his name in the chat. I'll take a look at it.
Excellent.
Yeah, for sure.
Yeah. Thank you.
Hello. How's everyone doing today?
There he is.
Have you seen?
Chat, man.
Not at all. Not at all. I was just a bit sidetracked. I was just watching gold. Gold played out. MT strategy just played out. Retraced 38.2% of that move. Perfect. Just a perfect move. From around 58 down to about 38. It's a 200 pip move. Absolute no-brainer. Just played out in seconds. Yeah, really, really, really nice. I was just sorting that out. Just having a little look. I thought, okay, we could just start in a moment. Just let that do its thing. All right, good, man. That's bloody good.
I see that you have gold and the Dow on the left side. Do you look at the Dow for an overall indication of like where money's going for the day, kind of thing? Is it sort of like a storyteller for you kind of deal, or is it just so happen to be on your chart?
Oh, the Dow. No, I trade the Dow. I generally always trade the Dow. When there's nothing else going on, it's something that I like to get on. It gives us potential for profit. So like yesterday, we had nothing going on with the pound pairs. So because of that, I closed them for a small loss and made my money back on the Dow. I think had I not had that, I maybe would have been a bit more patient with the pound pairs. I don't know. It was an odd one to call yesterday. Bit annoying really, because they played out and they played out perfectly and it was all good. It was just a day where it just decided to not move for a whole day, which is a bit strange. So no movement for the whole day, but then it worked and it played out exactly as if I'd just left them alone, not messed with the stop loss or anything, they would have just gone and hit target, no problem. They blew past all the targets. So yeah, it was quite funny. So gold, I'm going to show you gold as well in it shortly, because gold MT strategy played out, just played out now, and that's 200 pips. So yeah, let's get the workings on this. I'm just going to share this quickly and see. Let me just put it on here as well. So gold MT strategy just played out for 200 pips, and I'm gonna explain that as well. So there's nobody here today. 11 people. Really? Wow, that's fine. That'll do. Oh yeah, well we've got. Oh no, it's it. Oh, are they? That's dead. Who wants to watch that? We actually do have we have viewers on YouTube. Hello, YouTubers. Hello, so trying to reach profit 5% a month. Let me read that. 5% a month. Let me just see that. Do you think it's possible? Yeah, of course. Yeah, 5% a month. Yeah. I mean, will you make that every month consistently? That's difficult. if you think of trading as a business, you know, you're running a business, and do businesses make a consistent profit each month? Is it exactly the same? It could be seasonal. It could be there's factors. There's always factors and variables that may, you know, that may dictate. I mean, Christmas time, could you make it? What if you took 2 weeks off at Christmas or 3 weeks off? What if what if you decided to go on holiday? You weren't trading. Would you make 5% still? Not necessarily. It just depends, really. It just depends. But yeah, I think you could aim for that, couldn't you? 5%. You just aim for 0.5%, 0.5% a day, and risk 0.5% for 0.5%, or risk 0.5% for 1%, or 1 to 2. You could just do, that handful of trades. I just haven't managed to grab any of these big moves over the last day or two. So the markets trend 20% of the time. So we always say, to put that into context, there's 5 days in a week, 5 chances to make money. 20% of those days, so 20% of the time, so maybe one of those days, we're going to have some decent movement. Like we are finally seeing some decent movement today. Nice long moves on the pound pairs, perfect, no drama. A nice sharp, strong sell-off at the moment going on gold. And for me, these are the markets that I trade, and for me, this is where the money's to be made. And yeah, so I'm going to show you. I'm going to show you what I was doing yesterday. I'm going to explain. Let's have a look at pound dollar to start with. Let's look at it on let's have a look at it on a 4 hour as well, just to give you some idea. This is the MT strategy that I called yesterday. I think because of the presidential handover, I think that was partly the reason why we had a serious lack of volume yesterday. It was mad, wasn't it? It was just nothing was moving. It just sat there the entire time we were watching. So for me, I'm one of these people that I know my strengths and weaknesses. I'm not a patient person when it comes to things like that. And when I say I'm not patient, I'm not talking 5 minutes. To be fair, I sat in that trade from around 10 a.m. London time right up until, I don't know, until I closed it, which was 4 or 5 hours later. So 4 or 5 hours, this is where it was. It was just sitting on the EMAs on the 4 hour, and I was waiting for the momentum to cross over, and it was just taking ages. And because there was no volume, I just felt that perhaps we would see easily a spike down to take everybody out, because if there's no volume in the markets, then it doesn't take much for the banks to pump some money in to make the market move. So if there's no volume and there's no real movement, they don't have to come up with a big lump of money to actually say, right, I'm going to sell this. They could just put a little bit on, and it would just make the market move in their favour quite quickly. So I was sitting there thinking, okay, this is not doing what I want it to do. It might just drop down. Maybe later, if it gives us a bit of a sell-off, maybe we can review it. And I had some indicators here saying that below the EMA, maybe we will see it, drop back down. And it didn't. Eventually it did cross over. So yeah, it just took ages, didn't it? But momentum was quite simply going with a trending move. So we had a nice bounce, and I'll show you. Not only was it a bounce off the trend line, so this is like an inner trend line. You can use these because you want to create a channel. I haven't bothered to do another line here, but you could do from point A here to point B, couldn't you? Create a nice little channel. And so yeah, so anyway, I didn't bother doing that. You guys can do it though, and you can see a nice little channel. So the inner trend line. So I was thinking it might come down here and test it as one confluence. What else do we have around that level, which is probably around the lower 135 area, where we have 135 as a round number. So you start to look at the market, and you start to speculate, and you start to think to yourself, okay, this looks like it's going to go up, right? It's bullish. It's going really, really well. And wow, we are not stopping on gold at all. It just keeps going. It's done another 40 pips while I'm watching it. It's doing one of these fantastic moves. Is this the end of the move, or will we see another move up? I want to get onto gold in a minute to explain it, because there's some good action going on at the moment. Let me see what's the next downside target very quickly, because I know there's a few people asking about that. Yeah, see, Benita saying like, yeah, better to watch paint dry. Yeah, sure. Gold, anyone who's shorting gold, potentially looking for 1830 now, 1831 and a half. 50% retracement, 50% retrace, 1831 and a half. So I made a note of that. See how we get on. We'll get back to that as soon as I've done the MT explanation. So we identify if the market is going to be trending. We know that we've had the pullback. We've established already that we've had the pullback, and we've said, okay, pound, bigger picture, higher time frames, it's bullish. So we've had a pullback. Are we going to just go all the way back up to 137 potentially? So we saw the first move, and it gave us a fantastic bounce off that support. And if I was to get some fibs, what we would then do is we want to monitor the move down. Wow, this gold is just dropping. It's very hard to talk about strategies and share and explain things when there's money being made and it's just moving really sweetly. But anyway, this is trading for you. It's never an exact science, is it? So we take the last swing low. So pretend on the right hand side, pretend none of that's happened. We take the last swing low, we take that 137.10 as the new high. So it made a new high, didn't it? It took out the previous high at 137, made that wonderful high, took it out, and then it started dropping. So this was the pullback we were talking about, the rejection of that key area, that 137, which we all know is a key area of resistance right now. So we were looking for a pullback, and as you know, I'm a big fan of the 764 strategy, 76.4. I was looking for a move down to it, which was sitting at 135.12. Didn't quite get there, missed it by what, 8 pips. So not bad really in terms of, that's a 200 pip swing, 190 to be precise. So you can, it's never an exact science. 8 pips, you get the gist of it. We're looking for a rejection, support. We're looking for this pullback to be a pullback. So with that in mind, I'm still looking for the continuation up. And we've had this perfect pullback, near perfect pullback. Pretty fantastic if you think about it. So it's giving you a good indication that we are potentially going to be looking for a nice short down to the 76.4 area, and then here we're going to start looking for buys, and sure enough it consolidated, beautiful consolidation, and then it bounced up, and this was on Monday, and so I was starting to look interested in terms of what sort of a retracement we're going to get. Now with momentum, I want to monitor and I want to measure this move to the upside. So we start using fibs, we start using these EMAs, we start using this momentum indicator, because this is volume. This is a volume indicator, and this is called the awesome indicator. And so I bring this into play, and what we're looking at is we would remove these or pull these fibs back. It was just to show you where I was coming from, so you could sort of understand what I was looking at. I mean, I've kept you all up to date. Well, every day I'm talking about the pound, and I'm saying it's doing this, and then it's going to do this. That's the good thing about when we say just focus on one or two pairs. By focusing on just the one or two pairs, you're allowing yourself time to stalk the price, keep an eye on what's going on, and you can pretty much track it, can't you? So you know what's happening. So it's done that move down, so I'm no longer interested in the short because it's bullish, and it's coming up here, and all we're going to do is look for pullbacks for entry. And what we want to see here on the momentum, this is a 1 hour chart, so we start looking at the 1 hour chart, the 4 hour chart, the daily chart. We don't want to look at the smaller time frames for momentum or any of our strategies really. The 1 hour is the lowest time frame that you should ideally be looking at, and you're basically looking for it to cross over cross over the zero line and start looking for some bullish momentum. You can see the volume initially was very, very low, and it really wasn't doing anything. And that was Monday night. It was quite late, so that was the end of the US session and the end of the London session. And so, yeah, you can understand that. But come in the morning, what I saw was the Asian session had given us a pump, and then a bit of a rejection, a bit of a liquidity grab to the downside, but it had rejected. So Tuesday morning, 7 o'clock, this has it's done the pullback, but it's still showing bullish intent. So you can clearly see here, I was saying 136.15 is the area that we're interested in breaking, because that was a 50%. So we're going to go with momentum, and we apply the momentum strategy. And what we want to do, we want to see a nice trending market. How do we enter the market with our MT strategy? Well, if it gives us pullbacks and we measure those pullbacks, we could then drill down to like a 5-minute chart or a 15-minute chart to look at the pullbacks, to see what sort of, like I've done here on this bigger time frame. You look at the pullback and what you use your fibs and see which one is it going to pull back to, which level, which fib level is it going to pull back to. And you use it on a smaller time frame because we're looking at this smaller integrate here. We're looking at this price action here, so we need to drill down into this area. But the same principles apply. You know, if we're looking to go long, people will always say wait for it to pull back and give you a retest of support, and that's the safest play, isn't it? Because then you know if it's hit something or broken above some key area and then it comes back to revisit that area just for confirmation, that's giving you a confirmation. So then you can enter, and then you can tuck your stop in just behind it, just behind that support or resistance. And that's what momentum is trying to do. It's trying to allow you to not miss out, because there's always going to be this FOMO, this fear of missing out, and you're going to be like, well, how do I get in this move? So we've missed the initial bit of movement, but this for me is all about confirmation. When it broke the 38.2, I thought, okay, we're going to get to the 50, because I know that, again, I'm applying what I know about the pound dollar. So although I've got this strategy, I have to take my wisdom and experience and everything I know about this pound dollar. And I know that the pound likes that 50 number. And it's sitting at just above that round number at 136. I'm thinking to myself, this is going to go long. And people start calling short here because they start getting twitchy and impatient. They think, right, it's consolidating. Just because it's consolidating doesn't, and look, it's at previous structure as well. If you used to go left and start looking at the supply and demand zones and the order blocks and just using that one confluence, which a lot of people just do, and this is why they were short in here, because they said, well, it's retraced 50% and we're going to see another down move. And I'm like, well, not really, because bigger picture's suggesting up, and we're suggesting it's still in a bullish trend. And so this is the move that we were looking at as the pullback. This is the short move, which is viewed as a pullback. Now, had we failed here, because nothing is ever guaranteed, had we failed here, I would have been saying, okay, maybe we're going to curl over and we're going to do this whole N shape. And had I seen some red candles on my momentum, which we did see here, but they were soon stubbed out, and we started seeing green again. But had we seen some red, and I mean like red here, red candle, like a red bar, it's not a candle, it's a red volume bar with a red dot, and start seeing some confirmation, again using the high time frames like a 1 hour and a 4 hour, when we start seeing stuff like that, then I know actually this may have just run its course to the upside, and we're going to carry on down. And we could apply a momentum indicator to the momentum trade to the downside as well, just by simply saying, okay, we've gone down, we've bounced up, and it's often a nice trade, isn't it? Down, up, like a bouncing ball, retrace to 50% or so, curl back over. But in this case, I was looking at the bigger picture, and so that's why it's never an exact science with trading, and it's subjective, because I can completely sympathise with traders who are looking at this move down and saying, well, this is a move down, so we're going to see a pullback and another move down, and I can understand that, but at the same time I'm thinking, no, it's not going to do that. It's not going to do that at all. I just don't see it somehow, and that's where we're at with it. So I was looking for longs, but unfortunately it didn't move. It didn't move in the time that I wanted, in a timely manner. So hardly the strategy, you can't really label it momentum, because we're looking for a trending move, and we associate a trending move with a move. Now, 40 pips in like 12 hours is not a trending move. 40 pips is a dead move. That's, for me, it's just, it's not enough at all, is it? So Um, so that's why I got out, made my money elsewhere, and just thought I'm not sitting here for the rest of the day. And sure enough, and then people started saying, I think they saw me getting out and saw that as a potential cue to maybe take it short. And again, I started seeing people go short, and I was like, well, it's still not done to the downside, to the upside. We still have that momentum, but it's just very well. You can see these are hour candles. You can see how little they are and the way they interlock and overlap. But so what we would do is to look for an entry here, we want a pullback. So we're looking for pullbacks. We want pullbacks to be rejected like we saw here. And then we want to basically say, okay, it's done its job to the downside, and we're going to continue with that trend. And so to look for an entry, this is when we would drill down. We'll drill down to like a 5-minute chart, or we'll drill down to a 15-minute chart. Let's have a look at a 5-minute chart. Okay, and let us scrunch it right up. Because momentum is about trying to find a safe entry. So when stuff is moving, we don't want to get stuffed on it. We want to find a safe place to enter. But it's like a fast-moving train. You don't want to jump on it and get smashed up, because the volume and the volatility might be a bit scary at times. But at the same time, we don't want to miss it. So let's see if we can go back a little bit. Yesterday, which was the 19th of January, and we'll try and break this down a little bit, because this is about trying to find that entry. Alright, so there we go, done there. I'm going to try and zoom in so we can just see. Wow, that's really going, isn't it? So I was just checking something on the Dow. 12, 20. Okay, that's cool. So here we have that move, that little spike down, and it's come back down to test any bit of support that you've got on your chart. So I use fibs, I use EMAs. You can see the 200 EMA on the 5-minute is keeping us in the game. It's done a little spike down here. The time as well. What time was that? That was Monday night. So I thought, okay, we'll leave that alone and we'll just observe and we'll just see where it opens. It gapped up. It gapped up on Monday night as well. When they adjust everything. So I thought, okay, that's fine. Let it come back down and retest that area, fill that gap, and then we'll see what happens. And then we came down perfectly. Tested that gap at what time was that? That was about 7:20 yesterday morning, and instantly filled it and rejected and sort of pushed up, took out previous structure, and it looked like it was just going to carry on going up. So I thought at this point, good, I'm interested. I'm interested in using 136 as our level. This is the start of the London session. Let's see if we can get some continuation long, and let's see. The US traders are on holiday, but they're going to come in. Let's see if they decide to continue to take it up. If we get a bit of a pullback like this, then I'll buy into it. And so the thinking is always what's going to happen next, and what do we use in terms of an entry, and how do we get an entry, and how do we use the momentum? Well, the momentum is identifying that the trend is there, and what we're looking for, a little notable pullback. So we have to use the smaller time frames and any telltale sign, because there's always something different about it. There's no exact manual say, well, if it does that. I mean, in this instance, I just saw that there was a gap. So I thought, okay, let it fill that gap. Once it fills the gap, see what it does there. The fact that it filled the gap, retested that previous low from the night before, then bounced, and we're sitting at 136. I thought, that's a little bit of a reason, a little bit of a confluence there, a little bit of rejection. And this is telling me that this is not done to the upside. And it's just observing price action. And, as a trader, you do that all the time, don't you? You have this hunch. You get a hunch. You have a feeling. And you're watching price action. You're thinking, yeah, this is still looking bullish. It still looks like it wants to go up. So, okay, so let's try and find some let's try and find some other reasons to get in. So I'm looking at the price action on the 5 minute, looking for reasons. So there's a gap. That's cool. Let's drill up maybe. Let's have a look at the other time frames as well. So then I would go to like a 15-minute chart, and then I'd do an hour chart. Because yesterday some people were asking me, what do you think just to have two charts up, like a 4 hour and a 15-minute, or a daily and a 1 hour? I'm like, yeah, but I'm not seeing the whole picture then. I'm only seeing part of the picture, and for me that's not enough. I need to see, I need to see what's going on. It's all a little bit slow. Bear with me. Just got to close these things down. There we go. That's that. Good. Yeah, let's see if we can minimize this now and get the 15-minute chart. It did this yesterday, didn't it? It lagged a little bit, so you have to bear with me. Apologies. Good. So that's done it. I find it very, very difficult to explain the exact science behind strategies. I find it's more about looking, observing. That they're a guide, a roadmap, as it were. It's like your GPS. How many times do people follow their GPS blindly? If you know about a route, you might think, actually, I'm going to go that way, for better or for worse. It's just, it just depends. So these are guides. A strategy for me is a guide, to put it into some context. A strategy is an occurrence that happens frequently in the market. Yeah, so I mean, I said it again. It's an occurrence that happens frequently in the market. So I notice things. So you notice things. The more hours you spend trading, the more experience you get. You start seeing and recognizing and thinking, actually, it could do this at this point. And so then people will wonder, how comes you get a good entry or sniper entry, or your timing's pretty good? It's because you notice these occurrences. Stuff just repeats itself, doesn't it? Price action does things over and over, and especially with like fib levels and different forms of support and resistance. This is how we trade, right? We just see stuff hitting, testing, retesting. So that's it. It's an occurrence that happens frequently in the market. And so you create a strategy, which is just a guide to remind you that this occurrence happens. If this is live, you should do a Q&A. Joe, what? Hey, do you like the new monster? Oh, I don't know, there's somebody. Weird. Anyway. Just reading some. Anyone have any proper questions? Let's have a look at that price action again on a 15-minute.
I do have a question real quick, Alex.
Yeah, go for it.
Do you ever find yourself taking trades just based on like price action?
Yeah, so the momentum and pretty much everything that I trade is predominantly price action based.
Okay.
And so again,
So,
like I'm saying, yeah,
on GBP JPY right now,
yeah.
I noticed it formed kind of a.
Well, we're looking at pound. We're looking at pound yen at the minute.
Yeah. So
Oh, okay, cool.
on like the hourly,
Yeah.
it just looked like a triple top. Would you have taken a short at the top, right there, maybe 2-3 hours ago?
Well, I was explaining the momentum strategies because I was actually long yesterday, looking for these moves to play out to the upside. So for me, I wasn't interested in going short. I'm not interested in going short on the pound pairs if they go and retest the highs, because I'm looking for higher.
Okay, that makes sense.
So yeah, that would be a counter trend move, wouldn't it? Triple top, yes. Sometimes if markets are range bound, I mean, you can see that it keeps going up to these levels, testing and rejecting. So yeah, you can skim some points off these moves for sure. There's no right or wrong way to trade. Would I have done that? Well, maybe would have done. It might have been the case where yesterday I would have thought, you know what, it's get in again, take it long, let it do what I need it to do, and then then let's take it short off the top there. It just depends what kind of a day I'm having, I guess. Because we see stuff setting up all the time, but we don't always trade it. And yeah, I mean, I might have done it had it given me something that I could have got my been a bit more tangible with it. So possibly now with this move down, could be trade into a 38.2 down here. Quite possible.
Yeah.
Yeah, just like you say, price action. I was just a little bit peeved that I didn't get capitalised on yesterday's move, because it moved exactly what I wanted it to do, and now I'm trying to go some way towards explaining how I use this momentum to get in, because a lot of people are not clear, and I know it's quite difficult to really see, because I think with trading you just need to be back testing and be experienced and get more experience and practice in, and then you develop your skill. And yeah, so for me, I'm like, okay, all I know is that this is a bullish, it was a retracement down, this has gone up first leg, it's gone up the first leg, and it's interestingly moved during the Asian session, which I found very much like just a very interesting time for it to move. I was quite surprised. I didn't expect to see much. I was kind of hoping to come in for the London session and trade and make my money. But yeah, it done it without me. I'm like, oh, that's bloody annoying, So I thought, okay, let's. So I didn't do anything for the first 2 hours. I was up at 5:30. I went back to sleep. I had a little nap, and then I come back, and I thought, well, let's just wait, let it consolidate, and it did just that. So you've got consolidation here. You've got all these arrows saying down. I'm going to reboot this Zoom call, because this is. I want to get to the bottom of this momentum strategy so we can explain it, and you can ask questions live, and hopefully you'll benefit. Let me just stop sharing the screen a sec. Let me reboot the Zoom. I'm going to kick everyone out 1 sec. You're alright if you're on YouTube. Maybe you should all watch it on YouTube, it's just better. No interruptions. Bear with me 2 secs. Never trust SatNav. Funny. Right, get back on here. Is that loading? Oh, there we go. Do you know what I find really interesting is with a lot of traders, they want to, they want the Holy Grail, don't they? They want wave.
Really enjoy morning, man. Really learning.
Hope so. Wavy Penguin on YouTube. You're being a dick. Why don't you go and find someone else to annoy? Why are you posting just random spam messages? I'm trying to explain some stuff here that's just distracting, which is what you want me to do, right? You want me to be distracted. That's all right. Just donut. Anyway, let's see. Right, remove, put user, hide user. Right. There we go. Delete. Get rid of him for being a total numpty. Good. Yeah, I was trying to explain some stuff there, but kept being distracted. Somebody thought they'd come into the live YouTube session and start sending me random chat messages, which just spamming it. That's a bit annoying, really, a bit unnecessary. Anyway, yeah, no, good. I'm glad, because I was just saying, I just had somebody who was sending silly messages via YouTube, so I couldn't concentrate. It's just being yeah.
Is Winston still in here?
Yeah.
Yeah, I'm still here. Sorry, my
something that helped me was pretty much, I talked about it in one video, but become like a boring trader. So pretty much like just wait for trades that you're overly confident on, you know?
Yeah.
So like the one that you said, the triple top, like yeah, you could, but you know what Alex said was smart, how he just waits. Like he didn't take trades the one day because you didn't really see any, right? Or it happened previously, I think you said, Alex. But you just wait for those trades you're like 110% on, super confident, and then it's almost like clockwork, you know? You're just waiting and you're like, oh, there it is, there's the move, you get in, all the plan, stress-free, and yeah, you know.
You could scale in, couldn't you? You could scale in. Obviously, you recognise the price action on the pound pairs in terms of retesting the highs. So yeah, you know you've seen that. You've seen what it was doing. You think to yourself, perfect. I want to take a little speculative short at the very high of this move, at the high of this range. What's the worst that can happen? It spikes up and decides that it wants to carry on going up and take you out of the game. Okay, but you know, so it does that. You're going to have a small loss because you're getting in at the top. Best possible place to get in. The momentum strategy is not something that I use to get in at the top or the start of the move. This is when the move is already established, like this. And then it's about feeling like you're not just going to sit here and watch this whole move develop and play out and not be part of it, which happens to so many traders so many times. There's this whole, you know, it's the fear of missing out. And so we're trying to use something, a strategy that gives us a bit of a roadmap, that gives us a bit of structure so that, you know, yeah, so I was just reading some stuff. Yeah. Yeah, so I just want to explain it because it's a really difficult one. This is probably the hardest out of all the three strategies to utilize, but it's the one that happens the most, maybe, if that makes sense. So it's about wanting to capture this move. So we know it's going up and we think, okay, this is going to go and do a retest to the upside. So you just want to find an entry, a safe spot to enter. So the fact that it consolidated here just before the London session, I wanted to see what it would do at the London session, during the London session, and it was important that it's a key time of day. So again, you know, we are, you know, we're looking at time as well. Everything is relevant in terms of if you're taking it at 10 o'clock at night, London time, which is 5 o'clock in the afternoon, New York time. And what do you want to do then? You know, why would you be trading then? They usually reset everything when it comes to Forex, and they usually widen.
That's the worst time to
Yeah, exactly. So they widen the spread. So that's not when we want to be taking trades. That's not when we want to be trading. We want to be trading now. So I'm interested. So right now I was just chilling out, and I thought, I'm going to go chill out because it's already done this big move. I need this to pull back. If it breaks up, fine. And you know, it pulled back, and the fact that it pulled back, had a go, curled over, had another go. It was here that I entered on this spike. It broke, yeah. So it broke, and about 10 o'clock. It broke and I thought, okay, fine, we're going to maybe allow it to retest where it's broken out from. So around 136.15. What's it looking like on the higher time frames? Well, it was looking pretty healthy in terms of momentum. And so I'm thinking, okay, I've only used the smaller time frame like the 15 minute and the 5 minute to look for the price action. Now, I know, I think someone's asking me, chat after the stream. Yeah, ask me after, actually, Chris. Yeah, for definite.
No worries, yeah.
Yeah, I think at the end of it, because I think I do want people to kind of understand MT. I think if we can see some prime examples, because we've just had another one play out perfectly on a better one, actually, play out just exactly how I would want it to play out on gold. It was absolutely on point. But yeah, so we've broken out, we've tested previous structure. I've put my stop below all this noise at 136, and I just think if it goes down there, then you know we might get down to test the low 136s. But if we go down there, I think it might just curl over and maybe retrace, say 38% or 50%, and do that whole, you know, curl over to the downside. So there was no need to be putting big stops, and it is about looking for a continuation long, and that's what MT does. And I'm looking for rejection. So we've had the pullback, so we wait for pullback to give us an entry. It's gone up, it's come again, give us that entry. So we've got like a retest, and then it's slowly grinding up. So at any of these levels here, I'm looking to go long, which was probably about 9 o'clock onwards, London time. But I actually got in when it spiked. I thought, okay, it's confirming for me at least, this is the momentum still to continue to the upside. I'm going to put position here. It may well faff around a little bit, but then it should just take off. Looking for this sort of price action really, and it didn't really want to do it, did it? To be honest, if you look at this price action, it was pretty flat. But had I just exercised a little bit more patience, had I just maybe walked away or just said, you know what, it's not doing anything, but we're just going to leave it because the strategy is still valid, it's still doing what we want it to do, just leave it alone. So I didn't, because for me, I'm not that patient anymore. I don't think I've ever been patient when it comes to trading. Usually I tell you, like when you're working in banks and you are trading with a lot of money and you're instigating moves and you're putting positions on and you're making stuff happen, you make stuff happen, right? So you don't have to necessarily sit like this. But
Hello.
yeah, hi. So keep your mics on mute for the moment because I need to get through this and explain it. And so anyway, look, we'll drill up to the hour chart and you can see a little bit clearer. 50%, it's done a halfway move. We know the pan likes that 50%. I know it's done that. Now at this point, because it's consolidating, like I said, a lot of people started getting twitchy and said, okay, we'll start shorting here. It's not going up, so we're going to start shorting. Euro pound is directly correlated, so we could see the euro pound was starting to go up, so they started saying, okay, euro pound for longs, pound dollar then for shorts. And I'm like, well, no, I still feel that this is going to go up, but I went against my better judgment, and I guess emotions played a role. I got impatient and I didn't follow through with my strategy. And like I say, had I just left it alone, we had, as you can see on the hour, we've had this lovely move down early hours, and then we've had just sitting at that 50%, but still green, still bullish, still using EMAs. So we put a stop, just tuck our stop in behind all of this support, and really we just want to see this 8 EMA, this green line, that's the 8, just going to keep it going up. And that's how we use the EMAs, to just glide and guide and just keep nudging the price. It keeps coming back just like a little cushion, just keep nudging. You've got to remember or understand that these are 1 hour candles, so look how small they are. So were you prepared to sit in? I looked at my target. Was I prepared to hold all day for 40 pips? Or really, I should have said, it's 40 pips, let's just hold it. I've got a small stop. I'm looking at like 20 pips on average as a stop for about 40 to 50 pip target. It's a good 2 to 1. No drama, leave it on. Should have just done that, but I didn't. So I'm a little bit pissed off because I didn't follow through, because I just thought it's not doing enough for me. Volume's thin, so banks can come in. Is it something to do with volume that you was going to ask, Chris? You were asking about the.
No, a bit different, a little bit different.
Oh, okay.
Yeah.
Okay. Yeah. Okay. We can talk about stuff. Yeah, no problem. Yeah. So that was the move anyway. So we've gone up and we've exceeded targets. My target, my T2, my final target here was around 136.65, which it hit this morning. I believe it was this morning just before the London session. So that was the MT strategy. So the MT strategy is about finding an entry, using your volume to guide the price to see, okay, so we've crossed over here with our awesome indicator. We are showing bullish intent. There was a little bit of divergence, but very thin. So again, that's understandable because volume was thin, but these candles stayed green. It all stayed bullish, and so it did work out in the end. So when I note down on my journal, I'll be like, you should just set and forget, be more patient. Or yesterday, not really fussed about it. That's what I should be saying to myself, because I closed it around break even, no major harm done, and I made some money on the Dow, which offset that. So it depends how you view it. It's all subjective, isn't it, when it comes to trading? I'll try and explain a few more examples with the momentum. I'm not going to do pound yen, because the pound yen was pretty much the same sort of price action. You can see it was pretty dead yesterday. It was very difficult. I think this yesterday was actually, do you know what was really interesting about yesterday? Because it was so low with the volume so slow and steady, a lot of traders lost money yesterday. A lot of traders struggled yesterday. Because they are their own, you are your own worst enemy. You were very impatient. You're trying to move at 100 miles an hour, and the markets just weren't moving at 100 miles an hour. You were just going well ahead of the pace. And what I mean by that is that people see a move, it goes up, and they think, right, let's short it back down, and trying to catch the top. Or it goes down, and they're like, right, let's try and buy this, and catch the bottom. And people do that all the time. Always trying to do that. We have a strategy for that, divergence. We need to look for exhaustion of a move before we jump in it. Look for a reversal. And then wait for confirmation. In terms of confirmation, you can do stage 1, stage 2, stage 3. You can say, right, I need minimum 3 confluences, whether it's fib levels, whether it's round numbers, if it's some EMA structure support, all the blocks, supply and demand levels. Just the more you have, the better, really. And then you put your stop just behind all of that, and you take the trade. And that's pretty much what trading is. So here we just had a wonderful MT strategy play out. If I show you this on the 5 minute, because it's nice and clean, I put my fibs on here when I saw this dropping back. This is gold. This is today. This is just now. Targeting 1838. So we've got this momentum. You see it's crossing over. This is a small time frame, but you can see it's all crossing over. It's all going underneath the 200 EMA. Look at the 200 EMA for momentum on the 5 minute time frame, and then drill up to maybe the 15 minute time frame. Look for EMAs to be crossing over, so that we've got bearish momentum in this case, because everything's bullish. But when it starts crossing through it all, as it starts crossing through, you start paying attention. Don't necessarily jump in. But yeah, we had the pullback, and so I measured it because I wanted to see the pullback. Now momentum, a typical momentum, really like perfect momentum type bit of price action is, we'll get the first leg down in this case, then we have a 38.2 pullback, or a 50% pullback, something like that, or a 618 or a 764. Because this was a nice little move down, I put the fibs on here, and I was just monitoring. I thought, maybe, is it going to hit 51 and then drop? Let's see if it hits 51 and then starts dropping. And we did. We had a sudden sharp move. So that was saying, okay, we've just respected the 38.2 with this candle giving you this move, and it's like saying, okay, let's go. So for confirmation, you want to get in around here, if you're a bit more aggressive, a bit earlier, you start getting in shorted at maybe around 47, 48 as it starts pushing down hard. Piercing down below the EMA, the 200 EMA is what we're using here, and it's the 5 minute chart. So this is momentum. When you have momentum like this, you're allowed, shall we say, to go and drill down to smaller time frames, like a 5 minute, because on a 5 minute you're seeing massive moves. If you put this on a 4 hour or an hour, you likely miss this move because you can't really see what's going on. Drilling down to the 5 minute, in this case, is like watching it in high definition, in HD or Ultra HD, 4K vision. You can imagine it being like that. So that there's a time and a place to use smaller time frames. So the smaller time frames are, you're looking for an entry, so you need to go drill down to see. But when markets are just sideways, consolidating, range bound, smaller time frames won't give you anything. All they'll give you is noise. And if you're reacting to the noise, if you're reacting to the noise, it's annoying. So I just find it can be quite stressful to trade like that. So for me, it's about just focusing. There's a time and a place. We've had the pullback. Momentum is in play here. We're getting this good move. As it did that, I thought, right, we're going to get a good move. You know that gold does this. Gold is more than capable of doing this. It's a 200 pip move from 51 down to where, about 30, what's the low here? About 32. So yeah, best part of a 200 pip swing down. You know that gold's good for it. So when you get this sort of price action and it pierces, you think, actually, this is going to go, isn't it? These are the moves that people want. This is what you live for, I think, as an egotistical type of trader. You're looking for the holy grail. You're looking for these big moves so you can brag to your mates, your fellow traders, and you can say, hey, look at me. I just caught this fantastic move. And it's like, that will come, that will come with patience and a bit of skill and a bit of understanding of price action. And pullback, 38.2, bosh, down. So start entering here. Your stop's going to be here. If it faffs about and does all this, then maybe you've got to wait a little bit. But more often than not, and depending on the instrument you're trading, so with gold, it's no nonsense. Gold, when it moves, it moves. And it did, it moved. It went all the way down, breakthrough, short it. My first target's 1838. Why is that 1838? Because it's the 38.2. Why is it a 38.2? Because we've had a 382 pullback here. So we've had a 38.2 pullback here. If it'd gone up here a little bit more to a 50 or 618, then it's like an elastic band. You know that the further it gets stretched, the more power it's got for the retrace down, if you can picture that. Imagine it's gone all the way up here to the 76.4 and it's rejected. That's like really pulling that elastic band all the way back. The strain on that movement, if you can picture it, it's what happens with price action. The bigger the pullback, the more of a snapback you get. So, and with gold, it doesn't require a lot. So that's why I wasn't really thinking it was going to go any higher than the 38.2. I thought 38.2, we've got some EMAs there. Okay, might just touch, say the 50% or something, which is about 52. But, if this snaps back down or starts dropping, then I want to be getting in on this and start shorting it, because we know what gold is capable of. And so that was the move, and it was quick and it was easy. We had a few of these play out over the last few weeks. Because you don't have a strategy or a real conclusive idea of a target, an exit strategy, as it were. I see somebody yesterday short on a move like this on gold, and it snapped back like it's just done. They didn't bag any profit. They took nothing off, and they just watched it go all the way back up, which is that's just experience. But they'll learn from that. And the person in question is a young lad, so he's got all the time in the world to get good at this at price action and master it. But yeah, so my coming down here, previous structure 38, first target around 38, because my 38.2 is 1837.6, so 1838. So you had the pullback there. Even here on my 15-minute chart, I had a little indicator just to tell me with the stochastics that we were a little bit overextended. And a really nice candle, really nice pullback like that, and gosh, as it did this reversal on the 15-minute. Again, I see my 5-minute, I see my 15-minute. They're both kicking off to the downside. Start looking at higher time frames and thinking, yeah, this is gonna push down lower. Let's get on this. Jump on it here. Starts breaking down. Maybe set a T1 somewhere like here, modest T1, which would still give you about 50 pips, which is great for gold. And it's modest. Come down to test maybe some EMA support around the 200 EMA on a high time frame, like a 15-minute, like an hour ideally. Just start looking for support and think, okay, that's a safe exit, that's a safe play. And what's my stop loss? Okay, I'm risking 0.5%. What's my risk? I've got about 30 pip risk here. So when it moves 30 pips, 40 pips, I can start taking some profit off. It did that in minutes. So you would have hit a T1, then move your stop to break even, take some profit off, stop to break even, and let it play out. And we just missed the 50%, because I said the next target's around 1832, and we got down to about 1832.5, to be fair. And again, look at gold. Look at the way it snapped back. It's given it all back. You wouldn't even know this happened if you weren't here watching it. If you'd stepped away for a few hours, come back, gold is where you left it. Same price, not until you look at a chart and think, Jesus, it's just moved 200 pips down and up. So that's why it's important to manage the risk, manage your stop, take some profit, especially with an aggressive move like that, with that amount of volume. Really, really nice. So that was the play. Now the problem here is with some traders, they will try and overtrade this. They'll try and milk it. They'll keep trying to re-short this and all sorts. And maybe getting short here on a little pullback, thinking it's just going to pull back, and it hasn't. It's kept going up, and that's probably going to go all the way back up to like 62 now, because that's what I have as that key resistance area on gold. Or it might just stall at around 58 or so. So what I'll do is here I remove these fibs now, because that's done as far as I'm concerned. We can do the same here, just to update, and that is momentum. We can go over momentum. I'm sure over the next year or so we will see setups, you know, and I will be sharing these setups with you and saying, oh look, there's a setup that's, you know, in line with my strategy, with my thinking, and you're welcome then to come and have a look. You're not under any obligation to trade these strategies, and certainly do not copy anything I do, or anyone for that matter, blindly, and think, oh, I'm going to risk half a house. I see people following some of these so-called expert traders out there, and some of them are pretty good online, aren't they? But people risk a lot of money, and then I think it's a little bit irresponsible, maybe, that the trader, not mentioning any names, the trader might then post profit pics from his followers, because someone's like just made 40 grand, you know, with like 5 grand account, which meant that they were completely over leveraged and they just gambled because they copied this guy blindly. And then on the flip side, someone sends him a message saying, I just blew my account, you bastards, you know. It's like, well, so you know, be sensible with how you trade, be sensible with your risk. You know, don't just follow me. I think with the with the strategies, I've put a disclaimer there to say, I need to personally go through all my numbers and see how many times I took the MT strategy, and then how many were winners and losers, because I haven't collated the information as religiously as I should, because I don't know, I'm just a little bit lazy, maybe a bit lazy when it comes to stuff like that, which is bad, you know. But I have got my trade journal, so I've got that information there. All I need to do is just sit down and be bothered to go through it all. And I know there are spreadsheets and everything can be automated, and I know we can do that, but you know, part of me is like, well, I've been doing this for so long now. I get a bit lazy, maybe. Not to say that I shouldn't do it or don't do it, but yeah, I will. I think the last year's just been a little bit crazy, if I'm honest. It's just, yeah, whatever. No excuses. So my point with that is, note it. We'll go through it. We'll forward test. You can forward test with me for the next so many months if you want to follow what we're doing. Let's forward test, and then you can produce your own results and your own stats. With the results, you'll get confident. That builds confidence, doesn't it? Because it gives you clarity. Look at that move. It's going all the way back up. We're just having a complete retracement. Just going to V-pivot. We're just going to go and give a total reversal. So for me, I've got my 15-minute chart. I've removed all those other fibs because they've helped me to identify the price to the downside as part of our MT strategy. And now we are just trying to bust the groove all the way back up to where it literally fell over, back to 1850, maybe stalled at about 1851, 764. But I mean, this kind of price action's too messy for me. It's not, I can't be doing with this sort of price action. If you were buying this back up, buying the dip, wonderful. But if you've missed it, you don't want to be jumping on that. So that's a bit of a rough explanation, very basic, as to looking at momentum, which is predominantly about price action. It's about you as a trader having that keen eagle eye and seeing something about to kick off and think, is this going to sell off? Is this going to move? And then understanding by using your support resistance, your fib levels, knowing where potential targets are. So I knew for a fact, maybe that's a big statement to make, but I was quite confident in seeing gold drop to 38. So for me to short this to 38 was fine. Now, even if I missed this short at 49 to get in there, I got in at 47 flat, because I was like, well, somebody said in the chat group 47 was there where they were looking to put their stop to go long. And I was like, well, again, trying to catch a falling knife. So I thought if it breaks, so I just, because someone gets in your head, just thought if it breaks 47, we'll short it. It broke 47, so I shorted it. And where did I take it down to? 38. Why? Because my 38.2 of that I just showed you was at 1837. So I shorted it to 38. Done. It's gone past that. It's gone another 50 pips or so to the downside, hasn't it? But not, whatever. Not an exact science. Good. That's enough. Hopefully that helps. Hopefully that does help you with your trading. A lot of it is about having a keen eye, and I think going back to like when the traders are in a bank, they've got all this money. They don't necessarily say, okay, if it hits this level, because we have a fib there, etc. It's more a case of, okay, there's the low, there's the high. We're going to buy here, we're going to sell here, and that is pretty much, that's it. It's vanilla. It's just plain simple. And you'll hear that all the time, won't you? Keep it simple. So yeah, any questions? Do we have any questions? And Chris, you want to ask about institutional stuff, or yeah? I'm very tired today, just knackered. Trying to get back into a routine. Any questions?
Is there? So I have a couple of questions, if that's okay, if you don't mind asking.
Yeah.
Or answering.
Yeah.
So my first question, with regards to institutions, so you worked in a bank, right?
Yeah.
Or,
I worked in it for a few
yeah.
different companies.
What did you? What was your role in it? Like, what were you trading all the money and stuff like that? Trading the funds, or?
It was different in every company. So let's go back to one of my first roles, which was investment manager. That was one of my first roles out of uni. Bridgepoint investment banking. It wasn't trading. It wasn't being on a trading desk as such. It was on a desk, but it was more about sales. It was more about speaking with clients and basically existing clients. They've got their money tied up with you and they want to maybe withdraw their money, and you don't want that to happen. So your job would be, look, I've got a new product. Sales, in effect. You want to keep your customers, don't you? Keep your existing business. So that's what I was doing as a young guy in my 20s, talking and getting out there, and it helps build confidence as well. And while I was there, you go and peer over the shoulders of other desks, and you speak with traders, because then you would pass a deal over to them to actually execute it, and say, well, look, can you, yeah.
Because there's like mainly, my question was, what was sort of the goal? Like, what was the job that they gave you in the bank? Was it to sort of go ahead? Like, did they give you an amount, or did they give traders basically an amount of capital that they had to go ahead and trade?
Yeah.
So like, what was the
Yeah.
process?
So
Or was it more so like taking, rather than taking intraday trades or day trades, did they go for maybe like more longer term swing trades? And
yeah,
like,
position trades, position trading. So you see, like with the pound, I was showing yesterday, highlighted. I just said, did anybody notice that the pound, that last swing on the pound since its journey, since inception of the last low, which was around 127? Anyone notice that it's done 1,000 pips, 1,000 pip move to the upside? So that's the kind of move that the banks are interested in. That's what they'll do. They'll just keep buying. They'll just keep putting positions on, take some off. Those that are, so one of the guys I worked with, he was the director. He was in charge. The managing director, he called himself, but he was basically in charge of global rates. So he was in charge of the forex side of the business, global rates. And his job really was to buy and sell currencies. So they would always ensure that they, whenever traders or whenever the bank wanted to hold money in the pound, for example, or dollar, then he and his team, his desk comprised of a whole floor of, a whole section in the office of traders, and they're the people you would speak to, and they put the deals on and they just buy. And all they're doing is that they're on their computers and they've got their little terminals and they put the trades on and they put so much money onto it. And you are talking about millions You know, tens of millions in some cases, even like, more. Just depends. Back in the day, it was a lot looser, a lot more loose. So like yeah, is that right? Yeah, it wasn't as stringent. The checks weren't there. As a trader, you did have free reign. You hear all these like amazing stories of traders like George Soros, where he was betting against the Bank of England. Because the Bank of England wasn't self-regulated, self-governed back then. It was governed by the Chancellor of the Exchequer, the guy in charge of doing the budget for the UK, which was, I think, Norman Lamont at the time, and the Prime Minister, his name was John Major. And so, he, as a trader, he's trading against politicians. And maybe they've got some advisors, So he just kept building his position and just kept putting more on. Now, it could have just gone bust. It could have all just gone and blown up. It was like a game of chicken, two trucks going at each other. Who was gonna swerve first? That's what he did, and that's what he did. And he pulled it off. They buckled, and then they realised that actually the Bank of England needs to be self-governed, and shortly after, the Bank of England went back to being independent and governed by traders and people that work in the institutions that understand this business, this game, because it is a game. It was too rich for their blood, They had that experience and like, oh, actually, I'm not doing that again, because they lost a lot of money. So the government lost a lot of money. It wasn't a good experience. George Soros, meanwhile, was portrayed as a hero, right? And it was amazing. But then the flip side to that is that that there are some banks out there. You hear of a trader, Nick Leeson. The opposite happened. He had access to all this money, and he brought down the bank because he just kept adding to losing positions. And until he got margin called, he couldn't do it anymore. It just didn't happen, And then he got arrested, didn't he? And then he wrote a book and became famous for that, all the wrong reasons, and made loads of money. Whereas if it happens to you as a retail trader, you blow your account and what? No one wants to listen to you. No one wants you to write a book about your losses, about you blowing an account. And so they had access to millions and millions. And there was quite a few cases shortly after the spotlight was shone on this, and just after the 80s into the 90s, early 2000s, because you started seeing a lot more aggressive trading, and then the dawn of the internet really brings it home. And so things had to be reviewed. And I mean, like now, last year with COVID, we have buffers. So like if the stock market starts to sell off 7%, I think it's like 3%, 5%, 7%, there's a breaker. They call them breakers. So the markets close for 15 minutes while everything resets. That's just to like take the, cool things down a bit, and that's what they do. But back in 2008, there was nothing like that. If the markets wanted to sell off, they were in free fall. Nobody knew how to do it. Nobody knew what to do. And all the banks pulled together, and they got the governments involved, and the governments then used taxpayers' money, our money, to bail out the banks. Because they said, oh, we need the banks, but not before a few banks went under. Banks all over the world disappeared. The biggest, most notable one was Lehman Brothers, right? They disappeared. And I had a friend just started working for them. He'd been there for maybe a year. He'd been with them for maybe a year or so, and that was it. He was out of a job. So, just crazy. Now it's a lot tighter. You don't just get given money. You are part of a team, part of a crew, if you like. And so any trades that you take or put on, you're talking with people like when I had my job as an investment manager. It was, I wasn't managing people as such. I was managing my clients and managing their money, their funds that they've got tied up with us. And that was my first experience. And so I would talk to the traders and say, can you do this for our client? And what's the best rates you can give? Whatever it was, could have been anything and everything, all sorts. And and that was quite interesting. It's a different kind of game, completely different, worlds away from this stuff. This is retail trading. This is you looking to come in and buy a bit, sell a bit, make some money, right? And using support and resistance, because we are looking on much smaller time frames. Even a daily is a smaller time frame compared to the banks, they don't really look at time as such. They just say, right, we're going to buy here, and now it's got to like 137 on the dollar, on the pound against the dollar. Yeah, maybe they've taken some profit off. It's struggling to break it. But maybe they'll just review whatever's going to happen over the next few weeks or month, and see this transition with the new president. Maybe we'll see 137 break, and then if 137 breaks, the banks are the ones taking these positions. They're going to pump the money up. Where are they going to take it? They're not going to take it from 137 to 138, surely not for 100, just for a measly 100, are they? But then it could just be that they're already in at 127, so they're just going to go up there, stop people out, maybe grab some liquidity. There must be some orders up there, and maybe they'll just do that, and then they'll take their profit and close positions, and then you see it all sell off again. And so that's why you tend to see reactions at these key areas, because it's profit being taken, which is sensible. And you as a trader in a bank, you will be like, okay, money's made, yeah, we'll take the profit there. We're not going to just hold positions to flap in the wind. We're like, well, we've made money here. Look at that. Look at gold. What a V-pivot. What a move. What do you reckon, Chris?
In terms of,
I don't know. Did I answer? Did I give you any information there? Was that useful?
yeah, my question mainly was just like how the banks trade, right? Is it more so them trying to take profit, or is it them like, taking longer term positions kind of deal, and then just more so from like an investment perspective?
It's so you imagine it's always from an investment point of view. So they're thinking longer term. So each year, 12 months, you want to put stuff in to wherever, invest it in, depending what it is that you're focused on. It could be derivatives, it could be commodities like gas, natural gas, oil, gold, silver, copper, platinum. It could be things like coffee, wheat. There's a number of things, all traded in the same way. Nothing's any different. I mean, you could put your fibs on these, support and resistance on them, and the reason it all works is because it's all traded in the same way. So that's why technical analysis works. And so technical analysis is useful. It's become useful because this is all driven by humans, and we are the people that create this, and so we're using this stuff all the time. So we're endorsing it by doing so. But yeah, what you're saying, say you get the call from your bank, you've got money tied up, you've got $1 million, Chris, you've got your $1 million, you've diversified, you've put it into various things, you've bought some, I don't know, you bought some shares in Apple, you've got your safe haven type shares which are giving you dividends each year. But then you say, right, I'm going to pull all my money out. You'd phone your bank, and they'd be like, what? No, you can't do that. They'd be crying, wouldn't they? And they'd be like, okay, I've got new products. And so they want to keep it, they want to keep you interested and keep you invested. Let me just reboot this one more time. Apologies about that. I didn't see the time.
What happened?
It ran out. It ran out of time. I didn't realise. Apologies about that. It's just
Hey, Alex.
yeah. Just gonna mute my mic unless you guys have got questions relating to the banks or the strategies.
Yeah, we were talking about investment and stuff. Deliveroo, it's gonna go to the stock market this year, I think.
Yeah, maybe because it's done well, hasn't it? So
Yeah,
a lot of
I
people
read
ordering from home.
a news about it.
Cool.
And Amazon is backing up them. Did you know that? They're investing in Deliveroo.
Oh, Amazon, yeah.
Yeah.
Okay, cool.
Mm-hmm.
Okay. Yeah,
I don't know if you do investing. so you can know.
No, I don't. I don't really. Not like that. I don't just buy stocks or shares or anything. Yeah, that's cool. But anyway, there you go. Right. Let's finish up here, and let me just check what anybody talking on. Any questions being asked on YouTube? Hello, I just joined the Discord and this live. So, what are your predictions on gold? Yeah, well, it's going back up. Just following its journey. Spiked down and now it's gone all the way back up. Yeah, so. How long have you been trading, Mr. Forex Trader? On YouTube. Someone's asking about the strategies, about explaining. Yes, you talk about my strategies. How long have you been trading? Just asking you a question. That way I can get an idea what to tell you, what to explain, and how much detail. Okay, yeah, about 4 months. Okay, yeah, that's okay. So yeah, I can understand where you're coming from. I think with the strategies, which strategies are you talking about? Which ones have you looked at? Fantastic, look at that, what a move on gold. Have you watched the Forex Trader? Have you watched the videos on the strategies? If you, I know people. Oh, I looked at the playlists. Yeah, 3 strategies explained. Okay, so pick one and just look at the examples being used. Maybe start with the 76.4, so the 764 strategy. Also, if you have an understanding of Fibonacci and the fib levels, that will help with the strategies. If you don't use support and resistance in terms of Fibonacci, in terms of these fib levels, so like here, if I show you on gold, fantastic move on gold. There's a pullback just to go long. Wow, so strong. So we're going up now. We're going to potentially crazy moves, hey? So these are my fib levels, okay? So if I scrunch this up, this is a 15-minute time frame. These are the key levels. So make sure to start with, I would say, look at the levels that I look at and note them with your Fibonacci retracement tool. Edit and amend your levels so that they are in line with the ones that I use. Such a good move. Look at that move. Phenomenal movement. Okay, this could be the cue, you know. This could be the turning point for gold. This could be now, from here on in, we are going to be starting to see bullish momentum. And, yeah, upside all the way. Could be back to 19 at this level, at this rate, the way this is moving. And this is what I talk about when I talk about momentum. You know, this has got the legs now to go. Why? Because it's done a pullback. So it's done, we can view this pullback as a correction. So it has corrected, so that it doesn't have to necessarily go back there. The fact that it's just busted up as strong as it has, I mean, that's just incredible. So 1864 is the upside target. 1864. We are at 1860 now, round number. Will it stop here and pull back and then continue long? certainly 1864 is where we could be going up to. Is it just going to fly up there now? It's already been up so strong. So it might just stall here for a little bit of a respite. We've got the US Open in 6 minutes. Yes, 6 minutes. Phenomenal. So, hi Alex, I saw some of your trade records. Impressive. What are your winning rates with the strategy you use? Oh yeah, somebody asked that. So, I don't know. I mean, loosely, if I was to give a loose example, loose results, yeah, it's high, 80% of the time they work. So there are a few times it doesn't work. Of course, you have to include things like yesterday. I used my MT strategy to go long on the pound dollar and the pound yen. The volume was so low that it took until today for them to actually move to my targets. You know, I sat in those trades for about, I don't know, 4 or 5 hours, maybe more, yesterday, and pretty much closed them in the end because I ran out of patience. Closed them at around break even. Slight loss actually, you know, a little bit, like 5 pips or so here and there, a little bit, and I just focused on making that loss back elsewhere on something else. But yeah, it was they're pretty solid, so they work. So, but yeah, could I count yesterday as a win? No. But did the strategy play out? Yeah. Did it hit my stop losses? No, they didn't hit the stop losses. You know, the original stop losses that I had in place. You know, they worked. So you appreciate that sometimes we are our own worst enemy, which I always say that, because I ended up closing the position instead of just leaving them on. You know, so I just thought this is dead. Nothing's happening. I don't know if you see the pound pairs yesterday. So dead. Yeah. So yeah, there you go. Yeah. Hopefully that helps. Any more questions before we finish up? I would say if you want to understand my strategies a little bit more and you've only been trading maybe a few months, not that long, but you would like to learn a little bit more, you can send me a message. You can Telegram me. You can send me a message to my Telegram, and that is, the username is @ so the @ symbol ALX _ so the line, the bottom line, not the dash, the bottom line _ TYW. So @Alex _ trade your way. So @Alex TYW, or just go on my website because all the links to all the different, you know, social media I'm on there as well. Just so you want to get in touch, but Telegram's the best way to do it. The website's www.tradeyourway.co.uk. So that's how to get hold of me. Okay, so hopefully that helps you. But yeah, Telegram is yeah, perfect. That way I can talk to you and we can leave like voice messages and I can help you, just guide you in the right direction, just give you some information, tips, pointers, whatever. We can share charts, have a chat. You know, so no problem at all. So hopefully that's helpful. Have a great day. Yeah, nice to see so many people on the YouTube. That's cool. I hope that it's been beneficial and you guys have managed to learn a few bits. Was that good? Was that okay, guys?
Yeah, love
Yeah,
it.
I was good, thank you. The bank information was nice as well. It was good to hear your experiences and how everything works.
Yeah, you know, we talk about common sense. A lot of it is common sense. Remember that everything that the banks are doing, everything that the trading, that these markets are doing, it's all driven by human sentiment. So just thinking along those lines and appreciating that, you know, it's another person, another human being that's doing this. What makes them exceptional to you? Nothing really, apart from experience. So they might be better at you. You know, it's like anything in life, isn't it? Someone who's been doing it for a little while, their skill set, their skill level, they've leveled up, haven't they? They're on another level to you. But they're still human. It's just that they've been doing it for 20 years and you've been doing it for 2 months. And so, yeah. Not to say you have to do it for 20 years, though, to get to their level. You could do it for maybe, if you know, with work and graft, you might 2 years. You know, in 2 years you might be at a level that's, again, maybe not to their level, but at a level where you're happy and you're making money and you're living a better life. And so it's all relative. So yeah, don't worry about it. You got to think like that. Think bigger. Okay, so and just remember, a lot of it's common sense, because it's us. We're people. You know, people do things that are silly sometimes. You see what happened in 2008 with the recession. It's just sales, push. Let's sell any old junk.
Yeah, my uncle was actually just telling me about that, how he lost like 1.3 million or something.
Oh no, really? Oh.
Because he was trading, because he trades options and things like that.
Does he?
So
Oh, fantastic.
He was like really like heavily long on some positions.
Yeah.
And it just wiped him.
Nasty. I'm so sorry to hear that. Yeah.
Yeah, no, he was able to make it back like the following months after, but he was just telling me how money management is really important, because you don't want to go through those kind of situations.
Yeah, of course.
He was like he almost had to file for bankruptcy and things like that because of that. So yeah.
Yeah. See, that's. Yeah, people made money, people lost money. It was a crazy time, but you see now, I think people have learnt from these crazy times. If we have panic selling in the markets, you just know, you just buy it back up, buy the dip. So that's what they keep saying: just buy the dip, take some positions, invest. The only way to do that is not to trade, but to actually invest. So to think, okay, what's down, what's low? Oh, Apple's gone down, has it, as a stock? All right, might be able to get this at a cheaper rate, you know, get it at a bargain price, and you buy into it, and then just hold it for a year and 6 months, watch the reversal, and make some money on it, you know. And it's just phenomenal. That's what people are doing now. They're a bit more wise to it, because back in the day, recessions would last for years and years, and we just had this crazy bit of price action a few times back in 2018 as well, and it literally only lasted for about 3-4 months. By about 6, 7, 8 months later, it was all back to normal. And then same with COVID, you know. So yeah, amazing. But there you go. Yeah, keep in touch. Anyone want to talk to me about anything, ask me questions, then oh yeah, there we go. Someone's just sent me a message now. Yes. Yeah, and I'll talk to you guys then. Thanks a lot. Have a nice day. Enjoy the rest of your day, evening, afternoon.